Here's a number that should make you angry. The average American driver is now paying over $2,300 a year for car insurance. That's almost $200 a month just to drive. And if you've opened a renewal letter recently and thought, wait, I didn't crash, I didn't get a ticket, I haven't changed anything, and your rate still went up, you are not crazy. And this video is going to explain exactly why it's happening and show you 7 moves that are genuinely working right now to bring that number back down. What's up, everyone? Welcome to Piggy. I make these videos for people who want to actually understand their money, not get talked at by someone trying to sell them something. And car insurance, it's one of those bills that most people just accept. They open the renewal, wince, and pay it. Because what else are you gonna do? Well, a lot actually, and I'm going to show you. By the end of this video, you'll know the real reasons your rate keeps climbing, the 7 strategies that actually move the needle, and the mistakes that are quietly costing people hundreds of dollars a year. Let's get into it. First, the why. Because if you don't understand this part, the fixes won't fully click. Here's the honest truth. Your rate can go up even when you do everything right. Here's what's actually driving it. Reason 1. Your car is basically a computer on wheels now. Modern cars are packed with sensors, cameras in the bumpers, radar behind the grille. Great for safety, but the moment you tap another car in a parking lot, you're not just fixing metal anymore. A fender bender that used to cost $400 now routinely runs $2,000 to $3,000. Insurers price that in before you ever file a claim. Reason 2, inflation hit auto repair hard. Labor costs are up, parts cost more. Medical bills after an accident are way up. Everything insurance pays out got more expensive, so they charge more upfront. Reason 3, more accidents, more claims. People are driving more miles again, and distracted driving, phones mostly, means more crashes. More claims means higher costs spread across every driver in the pool. You're not just paying for your own risk, you're paying for everyone's. Reason 4, theft and extreme weather. Car thefts surged, and hailstorms, floods, and wildfires wreck more vehicles every year. Insurers price this by region, so if you live where either trend is hitting, your rate reflects it. Reason 5, ears, and this one surprises people. Your profile quietly changed. You don't have to do anything wrong for your rate to rise. Move to a new zip code, it changes. Add a teen driver, it goes up. In many states, even a dip in your credit score raises it. Your insurer re-rates you every renewal, and they don't call to explain it. These aren't tips you've never heard, but most people don't actually do them. And that's why most people keep overpaying. Strategy 1, shop smarter, not just shop around. When you go straight to Geico or Progressive online, you're getting one company's price. An independent insurance agent isn't tied to one company. They can shop your policy across 10, 15, sometimes 20 carriers in one conversation. And don't just compare 2 or 3 companies, compare 5 to 8. The difference between the 3rd quote and the 7th can be hundreds of dollars for the exact same coverage. Strategy 2, raise your deductible strategically. Your deductible is what you pay out of pocket when you file a claim. Bump it from $500 to $1,000, and you can drop your premium by 10 to 15%. The catch, you have to actually be able to cover it. Only do this if you have an emergency fund. But if you do, it's one of the fastest levers you can pull. Strategy 3, try telematics, but only if you drive well. Most insurers now have apps that track how you actually drive. If you're calm and careful, you can knock 20 to 30% off. If you brake hard or speed, it can work against you. Know your habits before you opt in, and read the fine print on how long they track you. Strategy 4, bundle, but compare first. Bundling auto with home or renters usually gets you 5 to 15% off. But don't assume the bundle wins. Add up the bundled price, then compare it to separate best price policies. Sometimes the bundle wins, sometimes it doesn't. Do the math. Strategy 5, fix your credit. In most US states, your credit score directly affects your rate. People with excellent credit pay dramatically less, sometimes 50 to 70% less, than someone with poor credit for the same coverage. If your credit has improved since you last shopped, that alone could unlock lower quotes right now. Strategy 6, stack every discount. Ask out loud. Call your insurer and ask plainly, what discounts am I eligible for that I'm not getting? Ask about safe driver, good student, low mileage, anti-theft, defensive driving courses, auto pay, and multi-car. Most people are leaving at least one on the table. The insurer won't apply them automatically, you have to ask. Strategy 7, Right size your coverage. This saves the most. How old is your car and what's it actually worth? If you're driving a car worth $5,000 and paying $1,200 a year for collision and comprehensive, do the math. The rule of thumb: if your annual comp and collision premium is approaching 10% of the car's value, it's worth considering dropping it. Look up your car's value on Kelley Blue Book. Takes 2 minutes. One critical caveat: never ever drop your liability coverage. That's the part that protects you legally when you cause damage to someone else. We're only talking about right-sizing the extras, not gutting your protection. One critical caveat: never ever drop your liability coverage. That's the part that protects you legally when you cause damage to someone else. We're only talking about right-sizing the extras, not gutting your protection. Let's flip it. Here are the mistakes quietly draining people's wallets. Mistake 1: full coverage on a car that's not worth it. Check the math. Mistake 2: auto-renewing without reviewing. Your insurer counts on it. Set a reminder 6 weeks before your renewal date. That's your window to shop and switch with no lapse. Mistake 3: only comparing 2 or 3 companies. 2 quotes isn't shopping, 5 to 8 is. Prices vary wildly between carriers for the exact same driver. Mistake 4: misrepresenting anything on your application. Don't lie about mileage, drivers, or where the car is garaged. If they find a discrepancy when you file a claim, they can deny it and cancel your policy. Not worth it. Here's what to do this week. Pull your declarations page and actually read it. Get quotes from at least 1 independent agent and 3 direct companies, 5 to 8 total. Check whether raising your deductible makes sense, only if you have the cash. Call your insurer and ask, what discounts am I not getting? Look up your car's value. If it's low, ask whether collision and comprehensive still make sense, while keeping liability solid. Do those 5 things, and you'll be ahead of the overwhelming majority of drivers. Car insurance got expensive for real reasons: pricier tech, inflation, more accidents, more theft, more weather, and insurers rebuilding margins. But you are not stuck with whatever number landed in your mailbox. The people who save the most aren't luckier. They just review more often, shop wider, and ask the questions most people never think to ask. If this video helped you actually understand what's going on, do us a favor and hit subscribe.